So Neil, you talk about that $1 trillion or maybe more north of that fiscal stimulus is pumped in. Is it possible that in fact the fiscal side is giving the central bank some headroom to raise a bit more so it has a little bit more ammunition for a possible downturn? Could there be some genius in this?
I'd like to think that there was some method in the madness, but unfortunately, I'm afraid we think that what President Trump has done is brought forward the likelihood of a boom-bust scenario for the U.S. economy. And so I think most market commentators are now nervous of the end of 2019, 2020 for a potential U.S. recession, simply because so much demand and activity has been pulled forward. And so I think watching the Fed, we agree at the moment that the market is underpricing the number of rate rises. We think it's 6, 3 this year, 3 next. But the thing suggests to me that the closer they get to delivering that earlier, that because of the leverage in the U.S. economy, we think they just pull forward the day when the U.S. economy slows under the own weight of its leverage.
So yet value is not outperforming. Defensives, everyone says it's not time to turn defensive in your allocation yet, Neil. When would be the pivot point?
Well, I would have said value traditionally does well when you see the cycle turn and the gentle rise of the underlying economy. I think in the U.S. we've seen a very, very dull economic recovery. Therefore, value has been very dull. But of course, value has been badly affected by the arrival of the disruptor and the millennial consumer. So we think there are many specific industry reasons why much of the value industries have not done particularly well, because they've not been well positioned for the change in the underlying economy that we're seeing at the moment across most of the developed world.